Hey guys, welcome back to the game of money. Money involves both sales and revenue and also investing, so we're covering both those topics. If you're investing in something that has to have sales and revenue, that's why I think we do well here. Yes, we can go out and raise money, then money goes into a deal, and then something has to happen called revenue. So these things are not disconnected from each other. The people who really perform and execute in this space are able to raise money, but also when they deploy that money, sales, revenue happen. So these are a mix. What I'm talking about here today is landmines. What I'm seeing is people go out in this environment that we're in. What's an environment? Good question. An environment is the macro system in which money is moving. Money is moving differently than it did during the everything bubble. What was the everything bubble? Do we have to define every term here?
I think so.
Okay. Everything bubble is when, again, you could buy a Michael Jordan rookie card for $100,000 and take the rest of the day off and then go, hey, I'm pretty darn sure that I can sell it tomorrow for more than I bought it. Everything was a trade, and you could trade in very lackadaisically with very little underwriting or research, and then because you had confidence that asset, whatever it was, Michael Jordan rookie card, a car, a company, a piece of real estate, a stock, was going to be worth more tomorrow than it was yesterday. And you could pick stuff pretty easily, and you go, I could just trade it out to somebody else. When do I want to trade? So the question wasn't, how do I underwrite this thing that I'm buying, and is it a value, and how do I add value to it? It's like, how much money do I want to make? Was the question. I'm going to buy a naked ape, or what were those things called?
A bored ape.
Bored ape, yeah. I'm going to buy a bored ape, and how much money do I want to make? It was the question. So that's not, the way money works today is you don't come into work, or you don't roll out of bed at 10 in the morning. You go, how much money do I want to make today? And you roll into your Michael Jordan rookie card collection, decide which one you want to sell. That's not how it works. So it's working differently, where we're back to features and benefits and value proposition, return on investment, IRR, internal rate of return, exit strategy, what you're going to do with the money, sources and uses, like really conservative stuff. And then as we said last time, everybody has been schooled up in the last 4 years in America. When I say everybody, I don't mean 3-year-olds, and I don't mean 78-year-olds. Hey, this is not about Joe Biden. All right? I knew you were going to take it there. Yeah. I knew you were going to take it there eventually.
I know. Him and Trump are going to do a golf match. I was reading about yesterday.
But everybody in between 3 and 78, it's highly gummed up. If you were a company and you're out looking for capital is 10, 20, 30, infinity times harder. As I said before, capital is not like selling. When you go out for money, it's not like you're Michael Scott from The Office, where you're eventually going to make a sale. If you work hard enough, you drive around enough, you'll get that sale across the line. When you go out to raise money, you can get 1 no, you can get 20 no's, you can get 100 no's, you can get 1,000 no's. It's much more binary. And so capital is not moving because interest rates are high. As we said before, private equity firms are gummed up in deals. But most importantly, I want to hit this as hard as I can. One more time. The unicorn factory is closed. And so a huge landmine to step on is try and pitch to investors that there is somebody in this trade up and to the right. In other words, you can start a company, you can get traction in traffic, you can get some revenue, you can get a beta out, you have a cost to acquire customer, and you can get in the channel and do marketing and have salespeople and get something started, and then there'll be somebody to come in and put in more money because that's all you've done. Because that's not a real company. That's a project. Right? In the unicorn factory, you could start that, and then somebody would go, okay, this is far enough along and it meets the criteria of a Series A investment.
Yeah, and all it took was good marketing.
All it took was good marketing. You didn't have to build a company. So you could be losing money and go, we're going to work that out as we get the value of the product up, as we compete better. So you could lose money and have the imprimatur or the essence or the contours of a company, call it a company, and then another investment group would come in and say that we'll buy it off of you. And then they would go ahead, and so I like to think about it like manufacturing a car. Like all you had to do was make the frame. Hey, we have the frame, and now we're going to sell the frame to the next guy, and he puts the body parts on. And then he doesn't build the whole car. He's like, the body parts are on, I'm done with my job. And then he sells it to the next firm upstream, and they go, okay, great. We buy companies with the body parts. We'll drop the engine in. So then they'll go up to Series B and say, hey, look, it's a frame, it's got an engine, and it's got body parts. What else would you want? All you have to do is put wheels on it. right? Once you put wheels on it, test drive it, and then get it out to paint. And then there's companies, call them private equity or late stage venture, and they're like, oh, great, it rolls, it's got an engine in it, it's got doors on it, it's got upholstery in it, all you have to do is paint it and take it out to the dealership. But you never had to build a whole car and sell it. So that is gone. So the huge misstep I see is people trying to build things that are still in that unicorn factory system where you're trying to create one piece, but not the whole company. So what are the things that signal that you're stepping on, you're over your skis, you're stepping on a landmine, you're moving into an area that you don't have experience? One is that you're not trying to build a whole company. I'll give you an example of this happening. What happens is companies now, they got stuck. So musical chairs stopped, and everyone's, with no warning. Music stopped playing, and they're sitting down, and they're going, okay, how can I fix a situation where I don't have a chair to sit in? I don't have a seat at the table. And so we'll hear all the time, oh, we're expanding overseas. So now you've got a $1 million company, a $3 million company, a $10 million company. And they have a business plan that's saying, hey, we have a $500 million market that we sell into. We're in a $1 billion market. You nod in your head, you know where I'm going.
If only we can get 1% of that market.
In the United States, where we've got $5 million of revenue, we're expanding to Europe. But you said the U.S. market was a $1 billion market, and you have $5 million in sales. So you have a tiny fraction of the overall U.S. market, and now you're going to do one of the hardest magic tricks in the world, which is expand to another country. Why can't you just go take more market share in the United States? And what they're saying is, as you and I were talking earlier, I'm trying to snap on some magic optical gimmick to my stuck deal to make it look sexy. Nothing's changed. So if you're stuck, the move in America is to not go, I need to get myself unstuck by hard work. The move is to say, what can I snap onto the top of this to make it look more sexy and get back into the unicorn game? So when the music stops, what people are not saying to themselves is the game ended. They're thinking the game is still going on without me. I got to get back in it with some
I got to buy back in.
I got to buy back in. What can I stick on the top of this that makes my same stuck deal look sexy? Let's go through it. Blockchain, machine learning, CBD, peptides, super drugs, organic. Yeah. What else can we stick on the top of the deal? ESG compliant.
You do celebrities.
We're going
on Cameo.
Cameo. We're going to do media. We're going to be a media company. We're going to do consumer products, vodka. Our SaaS, we're expanding into other product areas that consumers, because the nice thing about expanding into product areas that consumers like is you can get sales immediately, right? Hey, we realized that there's so many different frame spins. Hey, we're a SaaS software company in accounting, but we have a celebrity attached, so we're going to do a vodka, and then and we're also going to do media.
And all of a sudden, it's a new sales funnel.
Now it's a new sales funnel, but it's a new company pitch. But what else can you snap on the front end of a deal that is stalled in order to make it look super sexy in this environment? Electric vehicle, solar,
and you can even try to offer a new investment round too.
Yeah, I think you need a new story. Sure, we lowered the price. Yeah. You can always lower the price down to, if nobody's taking it at zero, then now you really are stuck.
Yep.
So one of the landmines that you can, in the thesis of landmines, you can step into is to say, look, we're stuck. Capital is moving slowly. Interest rates are high. Investors are busy working out their own crappy deals. Nobody wants to look at my deal, right? And not fixing the deal fundamentals and trying to glue something else on the top of it to make it look better. Because I think that will only fool you, fool yourself, it'll fool your team, fool a couple people close to you. But as you move out in wider circles, people are going to scratch your head. That makes no sense that this would be a blockchain company, a retail company.
And what's your quote about the brightest flame?
Yeah, the flame that burns the brightest burns the shortest.
Yeah, so it can re-energize your team almost in a sense.
Yeah.
But actually, it's going to burn you out even sooner.
Yeah. You got to fix the fundamentals in the deal. Ultimately, I think I would summarize it like this. The way that companies trying to attract investors is they move to this disruption mode. Whether you're on the sales side, like we're disrupting a market. But what are the real disruptions that have happened through time? the PC, the business PC, Lotus 123, which is basically Excel. So the PC in businesses, Lotus 123, which later became Excel, or Excel took over, and Word, Microsoft Word, and the PC in the business, massive disruption. Bill Gates, trillionaire, 100 trillionaire, whatever, a PC on every desktop, even though they didn't sell PCs, sold the software to run the PC. That was a disruption. Next disruption, internet. We're going to run out of disruptions here pretty late. Oh, car, fire.
Yeah, I was going to go back to the,
car,
the manufacturing line.
Yeah, sure. Scaled industrial manufacturing. Yeah. So the manufacture of the automotive, instead of having to hand make automotives. Then, so fire, agriculture, mass manufacturing of the motor vehicle, internet.
Steam engine.
Can we go from it? Can we just go from train? What else was there? Between train and the internet, was there anything? Come on, get serious. Any real disruptions?
What about the vaccines?
Vaccine. I like it. You're basically good. So vaccines, penicillin, sure. Can we get to the internet now?
I think we're ready.
Are you done?
We're done.
All right, internet. Then we go all the way from internet up to...
But the AI.
AI.
Yeah.
Yeah. We go to AI, whether AI is a chip or it's a AI, hand in hand. We got AI. So
just computer learning models.
Computer learning models. But think about it. All right, so now go back to your business. Name me some business. I don't want to pick on the people I know. Go ahead and pick on the people. So we have a buddy doing a med tech firm, the needle counting.
Yeah.
Disruption. You're not disrupting. What's actually happening here is you are innovating and providing some additional value and fixing some broken systems and maybe stepping into $100 million revenue. But that's not a the idea that you would be disrupting something is going to be discounted very easily. So now you're into the hard work of explaining an actual market, an actual competitive set, and then I'm going to land the plane here is how you avoid getting stuck and stepping on landmines as you try and find a position in the new economic macros for your deal or your products. Because everybody's, hey, I'm stuck. What can I twist into? What other market can I move into? My own market is gummed up. What can I add to my company, to my offer, to my deal? And then you get into areas you don't know that much about. And so ultimately, what you want to be telling investors or buyers is that in your market, over and over we say this, there's more demand for something than supply. You want to move in a market where there's a supply-demand imbalance. You don't have to create the change in supply and demand. Now you're selling a deal. If you have to convince me that there's a $1 billion market in the US in which there is a stabilized matrix of supply and demand. You have competitors, the competitors inch back and forth, they compete with each other, but consumers or businesses can basically get what they need in that market. But you're gonna drop in the Tesla of med tech, of SaaS software, of whatever, this disruptive change in that market, and then everybody's gonna stop using what they use to go use your amazing new thing. That happens all the time, but it takes huge amount of money, capital intensive. How much money did Uber use so far?
A lot.
A lot. Hey, so by the way, we don't have Google open at the moment.
No.
Because when we're running into numbers that will be very easy to find, we're just saying a lot. So I want to say a couple billion.
Yeah. Oh yeah.
$3 or $4 billion probably in actual capital used. More. $8 to $10 billion.
Yeah.
$10 billion.
Add Lyft onto it too, and just consider
right.
the ride service.
Like $20 billion.
Yeah.
So used capital to generate that very good stuff. We use it every day. If we need to go somewhere, call an Uber. I'm not sure it's a disruption, but it's a great innovation. It works well. It's still not extremely profitable. They're looking for a business model to work. They consumed $20 billion to get those companies working, maybe more. So you want to be, so the problem is they got people to stop using taxis. They got people to say, hey, it's just easier to, some people to New York or Boston or infill cities who go, I don't need a car anymore. And so I'll just Uber when I need to and not use public transportation. So it did really change a lot, but it used huge amount
to shift that consumer demand and sentiment.
To shift the consumer demand. So here's the landmine. Are you conveying to people that your features and your benefits and your value proposition are so strong, you're going to shift consumer and business demand over to what you're doing in your new business? Super hard story to tell. That's putting the game in nightmare mode, put the game in easy mode, right, and find either a way to frame it or an actual market where in our market there is more demand for this value, for these benefits, than there is supply. It's gummed up because of a reason. There's something stopping people from being able to get this good thing. We'll come up with a few good things in a minute, but what and why is it hard? Like, why hasn't Microsoft fixed it? Why isn't GE fixed it? Why isn't Ford fixed it? Why isn't Whole Foods fixed it? Why isn't somebody who has capital, knows what they're doing, fixed this supply-demand imbalance? And it's realistic that we, as a company in our size, our capability, the money, we have fixed it. We have because we bought a technology, we worked on it for a long time, we just focused on it. The innovator's dilemma is probably, and now we fix it, and now we're dropping this amazing value into these markets that are gummed up. So let's think of some supply-demand imbalances that you can think of. Okay, good. Chips. Yeah, but you're not going to fix it.
Yeah.
Super hard problem to fix.
Yeah.
NVIDIA and a couple other companies are nipping around the heels of NVIDIA, and Intel is now working on it. There's more demand than supply for chips, but nothing you can do about that. Batteries. So EV batteries.
Yeah.
And then go down to the chemicals and the raw materials that make batteries.
Yeah, the metals needed.
The metals.
Like lithium and
right.
platinum and...
Don't try and act smart here.
Yeah.
I know what lithium is.
I was going to run through the periodic table.
Yeah. Dilithium crystals.
Yeah.
Yeah. Copper.
Yeah.
What else is there more demand than supply? Airline tickets. So we talked last time, air travel used to be like more often than not, be like, yeah, I got 3 seats to myself. Never happened.
Never.
You're like, I got my seat and someone else was also in it. They double booked me.
Yeah, now they start offering like $2,000 for you to move your seat.
Yeah.
Sometimes because they take the risk. Yeah.
They take the risk. Yeah, the planes are booked.
Yeah.
So more demand for plane seats than supply of plane seats. Somebody needs to drop a solution in there, so that's waiting for it. What else? Watermelons?
Yeah. Yeah, maybe good food. I don't know.
Good food?
Clean food.
Sure. I don't know, demand. I think you saw, and then it can be hyper-local. So in Southern California, if you want to buy a Ford Raptor, a Bronco Raptor, or a truck Raptor, or the new Tacoma, you want to buy a Ranger Raptor, sure, pay $10,000, $20,000, $30,000 over market.
It's an interesting question, too, to propose all the little local supply and demand dilemmas, which is why if someone's driving right now listening to this, what can they take advantage of from a supply-demand level that's not big enough that Microsoft wouldn't touch, but it's localized, like Southern California? Those are where some really opportunities live.
Houses, affordable housing, more demand than supply for housing. Houses are $1,000. I'm looking at something that's $1,100 a square foot. That's too much. For the rent is too damn high. Yeah. That's too high, but because not enough supply, too much demand, it's a supply-demand imbalance, not a value imbalance. Although real estate people would argue, hey, if that's the price, then that's a value. But versus construction costs and versus relative other costs in other areas, super high. So yeah, I would think like in your business, in your industry, in your local market, not what can you do that's good? What can you do that's good in which there's much more demand than supply? And if you can recraft your story, if you can focus on the reposition of your business into that, I want to give some hard example. The deal we're in, sure. So very easy. In the United States, there's 255 million square feet of engineered quartz that is sold every year in the United States to homeowners and of engineered quartz is countertops. 255 million square feet of countertops are sold in the United States annually. Of that, only 55 million square feet can be manufactured domestically, and those guys sell out of everything that they have. There is more demand in the United States for countertops. There's 255 million square feet of demand, and there's only 55 million square feet of supply. Where do you get the rest of it? From overseas. So if you can use some technology, and if you can get in that market, and you can make it domestically, then you can just feed the demand and take away the need for the United States to go outside of its borders to import countertops and engineered quartz. And nobody wants to import engineered countertops from India. The reason is these things weigh 1,100 pounds. And it's like a bicycle. Like they're just very unruly to put in a crate. If you ever try to put a bicycle in a car, like maybe get one to fit. I don't even know if one bicycle would fit in your car.
No, not in my car.
Not in your car?
No.
So try and fit 2 bicycles. It's not like by weight that but they're just pedals and the handlebars. They're just unruly. Countertops are like 8 by 12 feet and weigh 1,100 pounds are just unruly to ship and they come here broken.
Yeah, let alone the quality questions too.
And the quality, like what's showing up. So should be really easy to fix this imbalance, but it's not, because in order to build a new engineered quartz factory in the United States to fill this outside demand, you need $200 million. And that's a hard amount of money to get. So if you can solve the money problem, you can drop a factory and take orders till you're blue in the face from existing demand. That's as simple as business in a box. So where in your market, in your local market, not can you offer something better than the other, a better restaurant, a better food, a better service? Better is not working today because people are actually looking at money. Supply of cash is more constrained. People are looking for, I want it, but I can't get it. Where can I get another one that's as good or better? Supply and demand imbalance. All right? If you can snap that into your story or actually into your business, you will stop stepping on landmines and get back in the game. Last thoughts?
Do you want to give a couple concrete examples of landmines that you see every day?
Sure. So here we go. I see landmines that people step on. They mix up the terminology of revenue, income, profit, EBITDA, NO, and margin. So those mean very specific things in business, right? So the big landmine say, hey, we make $10 million. Like what, you make it? You print it? How do you make it? Right? You're a counterfeiter. Catch me if you can.
You got a printer in the back.
Yeah, you got a printer in the back, right? You make it. So when you make it, is that profit? Is that after-tax profit? So is it NOI, net operating income, like profit? Is it pre-tax profit? Is it gross margin? Or is it revenue? So big shooting yourself in the foot or stepping on landmines is mixing up these terms that mean revenue. The other one is people screw up a landmine is ROI, return on investment, versus IRR. So if you say, hey, we make 10 million and we're profitable, I go, okay, what's your margin? And you go, oh, we have a 30% margin. That doesn't really make sense because it's too low of a gross margin and it's too high of an operating income.
And then you're going to start now asking them tougher questions.
So now I need to see the model.
Yeah.
So now I open up the model and now I see cells hard-coded in your model, whether it's a sales model or whether you're raising money or selling something. If I open your model and cells are hard-coded, red flag. You stepped on a bouncing Betty, it popped up in the air, exploded, shrapnel hit you, and you died. That is stepping on landmines. I think another one is, I've been hitting on this ROI versus IRR. So company CEOs, CFOs love to sell IRR, which is internal rate of return. So basically that means you're going to make this money, you're going to make a return on this investment down the road once everything works perfectly and we've exited. We've sold the deal or we've sold the company. We've paid you a return along the way. The sales price is in the future we're going to achieve. There's no way to know all this, and it's the crystal ball what you might make, IRR. Investors want to know is ROI, what every year I'm going to make in a cash-on-cash return. So whenever you're 100% just dealing in IRR, you're red flagging investors. What is my ROI going to be?
And your annualized return.
Your annualized
That's what they want to look at. If you go open up any brokerage account, it literally just tells you your annualized return.
Cash on cash.
Yeah.
So if you don't give a cash on cash return, like you have to discuss that. But you can't just throw IRR in there. So all kinds of companies are talking about IRR, thinking they're so smart and talking about return, and just they're getting red flagged.
Those are landmines. Yeah.
Landmines. Stepping on a landmine. A last thing is non-compliant language. If you say stuff like we guarantee there's no competition, we will. 2 words. Boom. Bouncing Betty, landmine, pops in the air, explodes in front of you, you die, start the game over. Or sometimes they don't let you respawn and start the game over. You have to go to, I can't say it, JAIL.
Yeah.
So we will is basically a form of guarantee. Guarantee is not a word you can say. No competition. That's not true. I don't care what you do. I don't care if you build spaceships to go to Mars. There's somebody else trying to do that. There's nothing in the world in which there's no competition. Bill Gates can't say it. Elon Musk can't say it. Larry Ellison can't say it. And you definitely cannot say no competition. Easy, quick, fast. Just get rid of it. Here's what's non-compliant. everything. Management believes, we expect to. These are all things you should be sure. It doesn't sound as sexy or as fun, and it's not as promising, but I think you have to, in order to be compliant, if you're in finance, but also in sales, you have to couch things in terms of we believe, management believes, our expectation, what our targets are, and that feels like much more compliant language than saying we will or you will get. So that's a red flag as well. It's a landmine you'd be stepping on. Topic for today was landmines. Lots of other stuff. Come back next time. We will not hit this again because we buried it 6 feet under unless it reanimates. Unicorn Factory is closed. Remember that.